Welcome traders, and in this video we're going to be looking at setting stop losses and the importance of setting a stop loss. So what is a stop loss? A stop loss is essentially a level in which the trade will close out as a loss and will be the maximum amount you can actually lose on that trade. So we're going to have stop losses and take profits. So this is essentially just a level within the trading setup that will stop your trade out at maximum loss. Why would we actually use a stop loss? Now, it's actually in order to grow the capital long term. If we can see the example that I've pulled up here, let's say for instance we wanted to buy here. So we want to buy at the entry. We've got our take profit, which is all the way up the green at the top line here. And then if we want to actually place a stop loss with a capped max, what we're going to be basically risking on the trade is the red section here. We can see that the market did in fact pull all the way down. It hit our stop loss at the bottom of the red section, and if we didn't have the stop loss, then the potential loss would have been much greater. So by having stop losses, you eliminate you eliminate larger losses, and you basically limit the losses on your account size. So some other reasons why we use stop losses, essentially to keep losses small and we get to live to trade another day. And if the stop losses are placed correctly, stop losses should be at the right time of the market. It should be the correct time to actually get out of the market. So by actually placing them at certain levels, if the market was to actually come to the stop loss, then you want to be getting out of the market anyway, because the trade will be reversing or the momentum will be shifting. So that's a good reason as to why you should be placing a stop loss. Stop losses decrease the risk of a trader actually blowing their account and works to protect the capital. Now this is true because if we actually risk a small piece of our capital, let's say for instance 1% or 2% or even 0.5%, that's the maximum we're going to be losing on that trade. So then obviously we can look to apply risk over many trades, and then obviously gather data over a large sample size and hopefully become a profitable trader by risking the small amounts of capital. So ideally we need to be risking around 1% on average in order to give ourselves any fighting chance over a long period of time. Some traders actually might want to risk smaller, especially when they're in the stages of learning, understanding how the market works and volume. And some traders want to build up capital, so maybe they might start at 0.25, 0.3, 0.4, 0.5% of their account risked on to any one trade at any one time. So stop losses is a great way to actually plan your trades in advance. Think of how you would be able to sustain a small losing streak. You know, you want to be trading with the small losses, and if you do actually go through the small losing streaks, as we all do, then you actually be able to sustain that period and actually overcome it, and then come back into making the profits and hopefully build a profitable performance or a profitable strategy that will actually get you out of that losing streak. We can do this also by risk reward, so we're actually risking a smaller amount than we're actually gaining, and the reward is a lot bigger than the stop loss in pips or a percentage of our account. And it's also a great way to build stop loss habits by placing them on every single trade, and understanding that you want to be risking a small percentage of your account. Okay, so to conclude on what a stop loss is, you should always use a stop loss. Now you want to be keeping the risk low by inputting the stop loss into your trade position, and you want to be trading safe and cautiously, as well as being able to put yourself in spots where you actually are able to gain capital and make a profit, but also being on the defensive side of actually protecting capital and making sure that your account doesn't actually see any significant loss, especially over 3%. So you want to be keeping the losses down to a minimum, and letting the profitable trades run a lot longer. Okay, so I'm just going to put up this quick example of a let's say using a stop loss and how beneficial it can actually be in protecting capital. Now let's say we're looking at this uptrend here, higher highs, higher lows, higher highs. We can see the higher highs being printed here. Let's say you did in fact buy near the top, and let's say you were anticipating further upside momentum within this uptrend. You place your stop loss. Let's say you want to place your stop loss below. In this case, because we're buying within the uptrend, we can actually place our stop loss below the prior swing lower high here, or even lower high here. But obviously, as the market did come down and invalidate the trend by breaking the higher low, and we created a lower low, we can actually, by placing the stop losses at these locations, we can actually see that the market has in fact turned round, and all of this potential loss has been avoided by using the stop loss and maintaining safety when it comes to actually trading in and around the trends of the market. In periods of consolidation or sideways movements, it can be a little bit more tricky to actually identify where the stop losses should be placed, or best placement for them. But ideally you want to be placing them in a position where if the stop loss was to be achieved, then obviously you want to get out of the market, but it should also be small enough in order to allow for potential growth and the potential profit on the table as well. So that's it for this stop loss video. It's quite simple. I'm going to probably go into a bit more detail on stop losses in the future, and some trade examples of how I've used stop losses in the past. But for now, stay tuned for more videos to come, and trade safe.